The biggest difference between success and failure is not that successful traders don't fail, it's that they learn and adapt from their failures. Sometimes as a failing trader, you don't know what you're doing wrong or what you need to correct. So today I'm going to give you 5 things that I've definitely done wrong as a prop firm trader, and you're probably doing too, and it's why you haven't reached the payout yet. Number 1 is trading too many sessions. Especially as a futures trader, we have access to the market almost around the clock, 23 hours a day. It can be very tempting to pretty much place a trade whenever you feel like, whether it be on your phone, on your laptop, your at-home desktop setup. You can place a trade almost whenever you want in the futures market. This is not the right approach though. Just because you have access to the market does not mean you should be trying to trade all sessions. I personally do not trade the Asian session well at all, so I avoid it completely altogether. I like using my lockout features on my trading platforms during those hours, so even if I'm tempted to chase some sort of long or short in the overnight hours, I don't even have the option to. Because again, this is just from looking at my data as a trader. I have a ridiculously low win rate in the Asian session, so I avoid it altogether. I encourage you to put some certain lockout hours on yourself if you find yourself being tempted to place a boredom trade, whether it be when you're going to bed, when you're waking up, or when you're unfocused throughout the day. Stop trying to trade every single session. Number 2, the issue that most traders are making is oversizing. Just because you get access to 15 contracts on a 150K account does not mean you should be using all of those contracts. This is the easiest way to lose an evaluation or a funded account, in my opinion, is using all of the contracts you have access to right away. Now, if you're somebody that scales into positions, not a bad idea, especially on winning days when you've built some extra drawdown to be able to use on the account. But if you are at a break-even account or even account in drawdown, I don't think there's any reason to be using all of the leverage that is offered to you as a prop firm trader. We should really reserve that extra leverage for days we're already up in the account for the day or extremely high risk reward opportunities. Number 3 is going to be picking the wrong plans. We're seeing something in the industry right now. Some people love straight to funded accounts. Some people can't stand them because they're so restrictive. No matter what, you as a trader need to be able to assess different plans in the market and understand there's always going to be a trade-off. Straight to funded accounts might be great for some. I'm personally not much of a fan because of the high trading day requirement and low consistency rules. They're very, very difficult to be able to meet payout. But for some people, it's a great option because they don't like evaluations. You as a trader need to be able to go through different prop firm evaluation plans and understand which one matches my trading style best. So here at Alpha Futures, we do offer 3 different plans that again are tailored to each kind of trader. Number 1 is going to be our 0 plan. This is our cheapest all-in price with no activation fees. They are named after their $0 activation fees. That's why they're called the 0 plan. This one is great for beginner traders. You can pass the evaluation in one day, but then when you get to your qualified account, you're going to need to show us you are trying to build solid habits. Next is our standard plan. This one kind of also fits the name. It's going to be for your standard trader, whether you are just a beginner or you're a little bit more experienced in your journey. The cost of entry is still relatively low. It's $79 for our 50K account plus a $149 activation fee. This one is for our most patient traders though, people that have started to form some good habits, bi-weekly payouts, 2-day pass, 50% consistency rule on your valuation, 40% on your standard qualified account. This is what you're going to see most industry-wide are these rules. Big difference here though is going to be those bi-weekly payouts with a payout cap of $15,000. So again, we reward consistency and patience in our standard accounts, which finally leads us to our advanced account. This is my personal favorite. I look for products similar to this in other firms when I'm trading myself. It unlocks the most freedom and rewards my personal trading style best. So looking at our advanced account, it is a 2-day pass with a 50% consistency rule, but no consistency rule on your qualified accounts or your sim funded stage. So for me, that is my personal type of account out there, is consistency on evaluation to make sure I'm forming good habits throughout my evaluation. When I get to my qualified account, I don't like dealing with consistency rules if I don't have to. Our advanced plan and some others on market do offer this. But in addition to this, our qualified advanced accounts have no news trading restrictions. So I'm not somebody that likes to trade news, but it is really nice not having to look over my shoulder or my trading history for high impact events. I do try to avoid them personally, but we've all been there when our stop loss or TP gets hit during a news trading violation. And it's something we feel like we should have reviewed a little bit closer, but maybe did not. Another reason why I love the advanced plans. Then of course, 90% profit split and 5 winning days for payout. Hard to beat, can pay yourself up to 4 times per month. Advanced plan here at Alpha Futures is my personal favorite. But again, guys, make sure you're reviewing the offering from the firms you are looking to trade with, because they might offer different plans that are tailored better to you as a trader. Make sure you're picking the right plan. Number 4, some of you maybe have not ventured into this yet, but I promise some of you have, and that's gonna be copy trading too many accounts. The scalability that prop firms offer is unmatched. It is a life-changing opportunity. I encourage people to look into it further down in their trading journey, but I see a lot of beginner traders immediately coming in and trying to copy trade 20, 30, 40 accounts across multiple firms, and they're not splitting their risk at all. What I mean by that is if you're copy trading 40 accounts, if you take one losing trade that blows 40 accounts, you are now in the hole probably several $1,000s. That is a lot of money to anybody. I don't care how much you're making at your day job or how much you're making from trading. Lighting several $1,000s on fire is not a good idea. So I do recommend, if you already in a very established place in your trading career and you're finding the scalability and copying a lot of accounts is working for you, great. You probably don't need this video, but for 99% of traders, I think they need to hear this. We should only be working towards copy trading. After we've stacked a few payouts, you should not be looking to get your very first prop firm payout across 40 accounts. You're not splitting your risk enough. You're going to find yourself rolling through a massive number of accounts over and over again. Just focus on 1 or 2 accounts to start. Then you can start scaling and adding in more copy traded accounts. And number 5, I started to hit on it a little bit there, talking about as you gain some experience in payouts, you can look to add more accounts. But number 5 thing I think too many beginner traders are not doing is rewarding their good behavior and then kind of not punishing, but making adjustments on your bad behavior. So what I mean by that is I talked about not jumping straight into 40 or 50 accounts right away as a prop trader, but rather start with 1 or 2, prove to yourself you know how to form good habits and act upon them. As you get a payout on those 1 or 2 accounts, reinvest those payouts into adding more prop accounts to scale for yourself, rewarding that good behavior. At the beginning of the month, I recommend setting some sort of cap on yourself, whether it be a budget or I'm not going to go over 5 accounts this quarter, right? Something that you can look and say that is a tangible limit I've set on myself. I'm not going to spend more than, let's say, $500 this month on prop firm challenges, or I'm not going to go over 3 accounts this month. Have something to hold yourself accountable that when you hit that limit, it's time to stop, go back to sim trading, work on my process and strategy as a trader so I can make adjustments and come back stronger next month. There you have it. Those are my 5 things that I know I've done as a prop firm trader. You're probably doing them too. Make adjustments, continue to improve. I did mention our Alpha Futures plans in the video if you want to check those out. I would be glad to help you guys out if you have any questions on which plan you feel is tailored best to you. Join our Discord. Myself or any of our staff would be happy to help you there. Make sure to hit that like and subscribe button. I will catch you all in the next video.